Is this on there? Hi, my name is Alex. It's good to see you here tonight. Thank you for having me. I am one of the founding partners of a company called District 15, and Dinesh is my other business partner. We started this business about 8 years ago. I'm going to talk more about our experiences and then how they relate to the limits of growth within our own business. So to start off with, I'm just going to take you through a short video which can give you a bit of an idea of what we do. So.
Take a look at the world through our eyes. Things aren't always as they seem. We believe that often the unlikely places are also the most promising. And that by challenging conventions, imagining possibilities, and bringing new concepts to life, we can unlock hidden potential, transforming unusual locations into thriving destinations. Creating places where before there were none. Bringing new ways to live and work. Making people feel part of a bigger picture. We're looking for those who share our view on development, to share the rewards too. Investing in the outliers, creating new places that we all want to be part of.
So basically, this thing's not, hold on one second. Right one? Okay. So basically, Dinesh and I invest in real estate, and we've done that for the last 8 years. And we started out with a mission to basically try and change the landscape in Hong Kong, create new communities and add a level of creativity to them, to take buildings and reposition them. And that's been our motto, and that's been our goal ever since we started 8 years ago. I'm going to take you through our story real quick, because it will then bring me back to what the limits of growth are in our company. We started off quite entrepreneurially, even though it is a real estate business. So we started off in 2004. Asset prices were very different from what they are today. We basically raised money. I used to work for Swire. Dinesh used to work for banks in Hong Kong and New York. So we used our own money. We raised money from friends and family, and we started buying units around Hong Kong, sort of apartment units, anywhere from Sai Ying Pun, Sheung Wan, what is now called Soho, which is Central. And we got about 24 units. And you know, we basically did everything. So Dinesh was working at the time. I was full-time in this particular business. So, you know, lunchtimes Dinesh would come out and help me fix a toilet, or you know, I'd pretend I was Peggy, the receptionist, in a very high-pitched voice, you know, taking someone's leasing inquiries or something like that. So we were working out of our bedrooms, and we had limited access to capital. It also became really, really difficult to manage 24 apartments between Central and Kennedy Town. So we needed to change our business slightly. We needed to think about how more efficiently we could operate this particular business in Hong Kong. So we started looking at buildings. We started looking at whole block buildings. And we took our experience from the 24 units around Hong Kong and used it as a case study. And we pitched a bunch of high net wealth individuals. Again, this is 2006, so asset prices were very different. There's a lot more opportunity to buy whole block buildings than there is today. So, you know, from timing perspective, we got quite lucky. We're big believers in brands and how brands transform assets and locations and real estate. So we put together a brand called Kush, which in Sanskrit means happy, and then we thought it was, you know, cushy, comfortable, and we started serviced apartments. And we launched that in 2006. We bought a total of 3 buildings, again, Sheung Wan, Sai Ying Pun areas. So these were fringe locations. These hadn't been tested before in this market. So what we realized is that we not only need to transform these buildings, but we need to transform these locations, because our target market wasn't very comfortable with living in Saigon at the time. They thought, this is way off the beaten track. And even the end of Kennedy Town, we were told, the end of Hollywood Road, we were told had bad feng shui. There were a lot of funeral homes there. People didn't want to live there. So we need to think of a way of getting people comfortable with that area. And one of the ways we did that was we really looked hard at our retail tenant mix. And we wanted to get creatives in. We wanted to get creative industries in. So, for example, end of Hollywood Road, which is now, if you guys have been, they call it PoHo, right? So it's a lot of restaurants, bars, cafes. But when we were there was nothing. And so we brought in a gallery called the Cat Street Gallery. She took the ground floor, and she had parties every 2 weeks. So what that did is it brought people down, it got people used to the area, and eventually more restaurants came down, cafes, and it's turned into the area that it is today. At the same time we were doing this, we site amalgamated a 7,000 square foot site in Sheung-Wan. So we identified 3 whole block buildings, and we wanted to build a hotel. We wanted to build out a hospitality platform from service apartments and move into hotels. So we actually commissioned Thomas Heatherwick. I don't know whether many of you have heard of him, but he's a big designer in the UK. He designed the London bus, the new London bus. He's designed the cauldron of the Olympics. He's doing a big project in Shanghai. So he was up and coming. He's also very innovative. So the design he proposed, which is the one on the right, we had to take to the building department and try and get approval. And I'll come back to this in a minute, but it was very, very tough to get that approved from BD. In 2010, we were approached by another operator in Hong Kong to buy our portfolio of service apartments. So in 2010, we decided with our capital partners to exit that particular portfolio. So we sold out to another operator in Hong Kong. And so at that point in time, Dinesh and I had been working the past 6 years to this particular, I guess, point in our business. And so at that point, we started District 15. And this is the company that we're running today. And basically, District 15, there are 18 districts in Hong Kong. District 15 represents Sheung-Wan and Central, and that's where we started. So we wanted a name that actually had meaning for us. And so District 15 has now become a catch-all for all the brands related to real estate that we use and all the real estate endeavors and investments we have. But we sort of got to that point and we thought, what are we going to do now? We've got a little bit more capital behind us than we did when we first started. We had a track record, and we thought the easiest and best thing to do would be go out and buy more buildings and turn them into hotels and turn them into service apartments. The problem was that in 2010, when we exited, asset prices had reached all-time highs. And no one wanted to invest with us on whole block buildings, people getting nervous, and we couldn't make the investment work. So Dino and I had to basically do a pivot, as it were. And we started a new brand. And we looked at office space, industrial space, and retail space. And we converted these spaces into loft-style, New York-style kind of commercial offices. And we actually also have an area in Sai Ying Pun, which we're turning into sort of a meatpacking district. These are a bunch of retail spaces. This is an ongoing development of ours, which we're doing. And again, we've changed our kind of focus a little bit from hospitality purely because the market has moved on from where it was in 2004, 2005. So with this particular area, how do we change these areas? We go back to what we did with Cat Street Gallery, and we look at creatives and creative industries to come down and do parties, to really bring people down and get people used to the area. So, a bunch of stuff we've done. We did an event with our friends at Creative City with Movie. This is one of the events we did.
Mama, Papa, stop, treasure what you got. Soon you may be caught without it. The curfew set for 8, will it ever?
And then we had this pretty crazy Adidas party, which is one of our spaces. get the idea. I mean, it's not rocket science, but it's really just getting people comfortable with new areas and locations and neighborhoods, which are originally on the fringe, but we wanted to sort of reposition and create. So when we thought we couldn't buy a building in Hong Kong, at the end of last year, we actually identified one for a hospitality venture, which is going to be called Tribute Hotels. It's in Yamate. We bought that end of last year, and we're now in the process of repositioning that, and that should be open end of Q2 next year. So we've kind of gone back on ourselves and again looked at hospitality again. But I have to stress that not many investors would look at this building, because this building is incredibly narrow, the floor plate is very small, the efficiency is very, very low. So, you know, we had to be a little bit imaginative again and go back to the whole creativity angle and really focus on design and branding. And you know, that's what hopefully we're going to be doing with this particular asset. So what are our limits to growth? I mean, what are the main things we think about on a daily basis? You know, we'd love to go around Hong Kong and do what we do everywhere, but unfortunately we can't do that. And we basically identify 3 main areas that really limit our potential to grow. If you notice there, I haven't put capital on there. I haven't put money on there. I mean, you know, there's a lot of money in this town. There's a lot of people overseas who want to invest in this town. Hong Kong's a very stable market, but that isn't, ironically, one of our limits to growth. So the first one is government policies and regulations. A lot of people, when I go overseas, they say, you know, what do you do? And I say, I invest in real estate. And invariably, you know, one of these 3 questions always come up. Anyone who's been to Hong Kong always asks this. And that's why, you know, why aren't there many places to eat outside, like in Paris or London or New York? Why can't we eat outside in cafes? Why can't we live in industrial units, like industrial lofts, like you can in Tribeca or Soho in New York? And why do a lot of Hong Kong buildings kind of look the same? And a lot of that comes down to government regulations. And quite frankly, I put this picture up of Thomas Heatherwick's design because this took us almost 2 years to get approval. We wanted to do something a little bit different. We wanted to do something iconic. We weren't a big developer. We were quite small. And what we found was that there was many factors against us to get this approved. We did actually get it approved. We got it approved for a 200-room hotel. The downside was that it took us 2 years, and at the end of 2 years, our capital partners weren't very interested anymore. So they wanted to sell the land, construction prices had gone up, so we ended up exiting that particular land investment, and we never built it, which was unfortunate. But there is a lack of trust on the part of the government with, you know, developers, whether they are big or small. For example, in New York, there's a development going up which has 5-meter ceilings. There's apartments in New York which have 5-meter ceilings. And it would be great to do something like that in Hong Kong. But the government thinks in Hong Kong the developers are a bit tricky. And what they'll do is they'll put a mezzanine level, once they've got the occupation permit, they'll put a mezzanine level in these apartments between, you know, in the 5-meter apartments, and then get extra GFA. So they don't allow it. There's a bureaucracy. You know, a lot of these government offices, they work really hard. They want to do something different, but there isn't the framework in which they can do that. So often they can't approve stuff which they would like to approve because of the bureaucracy involved in the approval processes. Conversion and reuse. You know, there's a big article a couple of years ago. I don't know whether you all saw it, but you know, there's not much industry in Hong Kong now. So a lot of the industrial buildings, the government said we're going to come out and let people reuse them, convert them into commercial, rezone them. The reality is that the cost of reusing these buildings and converting these buildings is so high that it often makes more sense to knock them down and rebuild. So this is a project that actually did get built, which is by an architect called Frank Gehry. If you guys haven't heard of him, he's one of the most famous architects in the world. And this is a project by Swire. Now, you know, one of the only reasons why that could get built is because it was by Swire. And if you want to buy an apartment there, it's probably about $450 million. So again, you know, it's not really, you know, building stuff for the masses, as it were. Another huge limitation for us is speculation. Hong Kong people love to flip properties. And you know, they'll buy, grandma will buy a property for $10,000 a square foot one day and then put it on the market the next day for about 15, and sometimes she'll get it. So a lot of these investors question, why should I invest longer term? Why should I bother? I'm doubling my money, and there's no need for me to do that. But what this does for guys like us is it leads to really irrational pricing, and we can't make a lot of these investments work because landlords are asking ridiculous prices. I put this up here because it's an example of a pretty ridiculous price in my mind. It's a 415 square foot shop in Causeway Bay, and it's sold in July for $233 million. That's $60,000 a square foot. And even at a rental of $480,000, that's a gross yield of 2.4%. So that's before there are any costs. This is what a lot of these prices have forced us, Dinesh and I, to do is to look overseas. So this is an actual real deal we looked at doing in LA. Unfortunately, it fell through. But this just shows you the comparable. This is 66,000 square feet apartment block for $89 million. So on a per square footage basis, it's 160 times less than what that shop in Causeway Bay was. So again, these prices make us and other funds and individuals and institutions a little bit skeptical and nervous about a bubble in Hong Kong. Another limitation for us is it's very simple. It's the size and stability of the market. So Hong Kong is a very small market. We've invested everywhere from Hong Kong Island to Kowloon and new territories. And it's still there aren't that many opportunities. And the big developers, to be honest, have a lot of it locked up. So it's quite difficult for guys like us who want to do something a little bit different and creative to actually get into the marketplace. What this limit on supply does as well is it creates a very stable market. So if I go to the next slide, during SARS in 2003, or just after SARS in 2003, when we were apparently experiencing one of the worst, sort of medical catastrophes in Hong Kong's history, occupancy for hotels was still at 70%. And, a lot of cities around the world would love to have an occupancy in good times at 70%. So, again, there's not much incentive for people to sell. Hong Kong's a very buoyant and stable market. In Hong Kong, the default rate for mortgages is 0.001%. In the US, just to give you a comparable, it's 7%. In Spain, I don't know if we have anyone from Spain here. Unfortunately for you guys, it's about almost 30%. So there's no real deals out there. There's no one's distressed, and there's not much to buy. Again, this just goes to the stability of the market. Very low housing supply in Hong Kong. Again, some of the lowest it's ever been. And this is English language press, but Chinese language press also has similar headlines. And because Hong Kong is again so small, these headlines make a huge difference.